What do you guys think of the stock market? I think it's fantastic. Lower interest rates, things starts moving. China comes in, makes their announcement, and then Chinese stocks or China-related stocks catapult, and the action is just very, very, very macro-y, I would say, if that's even a word. But give me 1 second here. For some
That's been pretty
reason,
remarkable. Do you believe all these, thoughts that October is usually a bad month? I mean, does that concept of historical months really matter anymore?
I would say, give me 1 second. Yes, so in machine learning, right? Um, in machine
That
learning,
October,
oh, there we go. Hold on, sorry. So in machine learning engineer, Bernard, they got this concept of like, you build a intelligent model, and and then that model you have to put it into production, they call it. And so your question about like, hey, like, typically October this or the seasonality this and that. Actually, October is typically a really good month. So I could show you in the seasonality chart right here. Let me just get that up. It's actually September. That's the bad month. Uh, so does it, and your question was like, does it mean anything? Sorry, I'm just like clicking some buttons and juggling stuff. So if you're talking about October, right? I think you meant September. Is that fair to say? Because historically, this is a 30-year back test. If we
no,
go back,
I just read something that said that October is usually a bad month or so on, but with the election, it's a wild card. But if September's a bad month, it wasn't a bad month. So
hmm
is it kind of meaningless? I mean,
hmm So no, I wouldn't say it's meaningless because it is a objective analysis, right? Because if we actually were to calculate the last 30 years, this is the result of like the seasonality. So in machine learning, as I was saying, the way they kind of operate is they'll build something called a baseline model, right? And a baseline model is just like baseline intelligence you could think of. So imagine like it's kind of like, let's say if you have a 4-year degree, then you have a certain level of baseline knowledge, but that doesn't necessarily guarantee success. But with that 4-year degree, you'll build off of that baseline model and you'll tune it to, I don't know, like to whatever you do next, if that kind of makes sense. So the whole point of this 30-year back test, yes, is quantitative. It shows that September seasonality typically is pretty bad, but it's just a baseline analysis, right? It doesn't necessarily mean that it'll be true, but we know that in 30 years, it has a tendency to pull back. And so it's a nice to have to kind of gauge what the markets could do. But at the end of the day, what I've been saying is that what we need to pay attention to is just markets in real time. Because at the end of the day, where price is at is just the most truest form of like where the game is at, if that makes sense. So it actually doesn't matter like in my opinion, the headline saying like, oh, this month typically is bad, blah blah blah. I mean, one is like, okay, that headline, did you do any prior analysis, like objective large data analysis, like this right here? This is a large data analysis right here because it's 30 years of data and we're analyzing like, the typical seasonality. But I'm also aware that that's just a baseline case and it's not always going to happen. You could use it for predicting like, potential turning points, which it actually worked out well in like the prior months when we were analyzing this. I don't know if it was like February or March or whichever or January, but it definitely helps on the long side. Now, if you're looking at it on the other side, well, I mean, the elections and stuff like there's micro like things happening in the economy, or how do I say this? There's many different layers to like the global economy, right? Like we're seeing a very bullish market right now because, well, I mean, Thursday, right? Was it last Thursday? Oh man, like 2 Thursdays ago, or was it last Thursday? I'm like losing my mind over here. We basically announced, Fed rate cuts, right? And then the markets got really bullish. So there's a lot of mechanisms that's happening, and the best way for us to think about this mentally, because it's quite a bit of an abstraction, right, is to understand like things that we know already, abstractions that we already know already. So let's say you understand there's a city, there's a state, there's a country, and then there's the world, right? So remember that setup because every news, it could happen locally at the city level or at the state level or at the national level or at the global level. So again, with elections and stuff, where do we put that? That's at the national level, right? But when we go to interest rates, what level is that at? It's at the macro level because it impacts other economies like Russia and China. So you see the caliber of information and where it stacks within the layers of abstraction. It becomes very important, right? So if you're trying to analyze the current environment today and why is it not following like, the S&P 500 30-year backtest seasonality, well, we need to understand what layer of information came out that impacted the markets. And so going back to local city, state level, country level, and then macro, global level, global macro level, well, we had some big news with interest rates and China, also talking about stimulus. That's like really big. That's bigger than the elections because we're talking about like money supply here. The money supply, cost of money, that's going to influence all tiers of economics. Economics at the local level, right? Which is like me doing business with Bernard shaking hands here in Silicon Valley, to state level, Bernard doing business with, I don't know, someone in San Diego or all of California, the California government, to the country level, to V doing a deal with, I don't know, or Lockheed Martin doing a deal with the government selling aerospace and defense goods and services, right? To global macro level, which is like the highest level of all that influences the global economy, which is like the impact of like interest rates or money supply or their plan for, moving the capital back to China, et cetera, right? China becoming cheaper, right? It's like you see Chinese stocks this week, they just rallied like crazy. Well, think about the players that would have the large players that would have to buy those stocks. First is like if they're in US dollars, right? Because rates go down, stocks in the USA go up, so big institutions pile in USA stocks, but then suddenly China makes a global announcement that is again a layer above election level, right? So it's more impactful if you kind of think about it. So there's so much abstractions here. I'm like I'm playing with a puzzle in my head. So the capital going into the USA stock market now now it wants to jump into Chinese stocks or China stocks, but in order to jump into China stocks, you have to convert your USD to RMB. From RMB, then you could buy China stocks. I mean, really buy China stocks, or you buy the tech stocks, like Alibaba or like the ADRs, right? The American Depository Receipts. So man, wow. In just like 7 minutes, we talked a lot about different levels of complexities, coming up with a machine learning baseline models and how, the news could say this, but in the end, the source of truth of it all is really just like what we do here every Sunday. Every Sunday we come in here, we look at the S&P 500 or whatever, and we look at the source of truth. If you want to look at other sources of lies or FOMO or sources of non-truths, I don't know, whatever you call it, you could read the headlines all day. But at the end of the day, money speaks, and we're watching where money moves here in real time. That's how it is. I don't know. Does that perspective help, Bernard? Hopefully, it gives you a framework of thought of like how I'm thinking in my head of like the different layers of like economy that exists out there and the level and the type of information that comes and how we process that information down, if that makes sense. Like, is this?
Oh, it does. I
Yep.
just think if you look at the 2 year graph overall for every stock, I mean, things are looking pretty good.
Yeah. 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 I mean, that's why we look at the S&P 500, right? The S&P 500 basically represents like all American stocks. Like even like believe it or not, even businesses that are like mom and pop shops, right? Like they're this is like the highest like equity level of representation, but because of its economic influence or impact, it also, in my opinion, represents like the smaller businesses in some cases. Maybe not like down to like granular accuracy, but if the S&P 500 is doing well, every other business is doing well, right? So Microsoft, Google, Amazon, Facebook, et cetera, they're all going to do really well. And right now we're in a very bullish environment, and we continue to be so. Now, believe it or not, if you guys are subscribed to my weekly reports that I issue literally every week, last week was actually the first week where I called out a solid green light across the board. Again, this is based off of just objective analysis, and then I make a judgment call every week, right? So, I just love it when again, for me, I get satisfaction from trying to be right. So I just want to update you guys, let you guys know that every week I issue that report and I make a judgment call. And so this week's judgment call was a green light, which again, we continue to see capital moving into next week. Well, I mean, it seems pretty good, I gotta say. Let's see.
It's just,
It's
it's a bit hard to really understand what's going on, though. I mean, if you look at these graphs, you'd think that there's world peace and
Mhm.
no inflation and no unemployment. It looks like it's like everything is
Perfect.
green across the world, right? I mean, it's just
Yeah.
too spectacular to believe if you look at these graphs.
Well, well, again, like remember and this is a great conversation, by the way, because the the game in the stock market, as far as I know at this point, is one is like this is why I say we need to pay attention to the source of truth, right? Not the fuzzy dreamy fantasy things that we're saying in our heads, which is like things comments like it just seems too good to be true. Oh, that stock is just way too high. Oh, that stock is so cheap, I got to buy up more, right? Those are kind of subjective. But what I try to align us on is like, hey, we got to get back to just the source of truth and objectively say, is it above that line or is it below that line? Does that kind of make sense? Like when we start saying like it just seems too good to be true, we're going to stop ourselves from capturing what money is actually doing. Does that sort of make sense? Like it just seems so good that I'm just going to choose to be a bear. That doesn't make sense from a, objective reality perspective. Like if it looks good and it can and then continue to play it because it still objectively looks good. The moment it turns and looks bad, then we start converting our thoughts because you're playing a game that's like, maybe like multiple steps ahead based off of like your subjective bias in your psychology. And that might not be representative of the macro consensus, right? So that's where I've learned a lot teaching invest this. It's been a passion. I've learned so much over the years in this investment club because I got to talk to a ton of investors and see where their heads are aligned, and then I always and come back to the markets and watch where the markets are lined up. And at the end of the day, my best recommendation or advice, again, not investment advice, but my lesson is we need to focus on the realities of right now and how capital is flowing. Because those are actual, big shots, like big triggers of capital moving that is just defining what's happening right now, not necessarily what's happening in our brains. So yes, sometimes like you need to have positive imagination of like where a stock price could go, but you also need to catch yourself, and I've learned to catch myself over the years, which is like when we start saying things like, "Oh, it's just too good to be true." Like, "Oh, that stock is so high, it can't go higher." But you know what? Check out Alibaba here, right? A ton of investors are like, "No, that just doesn't make sense." Like, China stocks this, China stocks that. But we need to learn to remove those subjective biases and just look at the real-time capital that's being deployed right here, right? If we're talking about like real-time capital being deployed, look at the amount of volume that came in like a very like, very sharp, just come on in and capital is just being piled into China stocks. It's absolutely impressive. So yeah, like that's what I mean. That's something that I would recommend in my opinion. Again, not investment advice, but recommend just focusing on what is capital saying right now, not what our heads are wanting to say or wanting to think. Because I've been in those situations before where it's like, oh, Bitcoin at, I don't know, $20,000. That's so high. It's too good to be true. It can't go any higher. Then boom, $69,000, right? Or I don't know, like Alibaba here for some cases. Like people will be like, oh, $85. Nah, it can't go higher. And then boom, 107. So we just have to look at capital deployment in real time and price movement in real time and just learn to be disciplined about looking at things objectively because that's what I do every week with the judgment call, right? I scan the entire markets. I come to conclusion of like what it's going to do, and then I just make a judgment call. But then it's through a process that I reveal in my weekly reports, right? It's really just analytical grunt work. But I enjoy doing the analytical grunt work because, well, like I've learned thus far that you have to learn to play with these mental abstractions in your head, right? Like if you don't develop, it's a muscle. It's literally a muscle. Like you have to develop abstraction thinking because if you don't have the frameworks like how I just said, like, okay, how do we explain elections versus how do we explain central banks cutting interest rates and trying to stimulus, right? We have to learn to place that information structurally like a data warehouse in our brains, which is like, okay, the elections at a national level, right? There's local, state, national, and then global level. So when interest rate news comes out, that's a global level news. That's going to impact the world more so than elections, right? Of course, but then it seems like China prefers, from China's strategic moves, it looks like they want Harris to win, if you think about it, right? Because I think if Trump wins, then it's kind of like, oh, he knows how to play the macro game, right? But I think it's like the perception is like Harris might not know how to play the macro game. So that becomes important, right? Because so now you think about most Americans when they think about votes and stuff. Well, are these Americans leaning, on pain points around, local national problems? Have they thought about what's happening at the macro level and commodity resources and empire, longevity and all that, or empire performance? Like, there's a lot of complexity that I think most people don't think about because they don't know how to maneuver the different mental abstractions that exist out there, right? Because they're not aware of like okay, like it's funny, like we talk about elections, and a lot of Americans will talk about elections, trust me, but no one really talks about interest rates. But interest rates, objectively speaking, is probably the more impactful component or variable in terms of like the stock market and capital flows around the world. So again, I mean, we could debate and talk about it all day long because I think that's how we develop our mental frameworks by going back and forth. So it's always a really good conversation. But from what I'm seeing this week, just the capital flows, the stock market performance, and what segments, I think that speaks more loudly than like things that we say in our minds, right? So we got to catch ourselves when that happens, in my opinion. But good morning, folks. I see some folks commenting here. V says, it's always good to understand the typical 30-year back test, but be prepared for atypical as well based on current environment. Yeah. So it's kind of like, like if you were I've actually talked to a national champion in Taekwondo, and he's been doing it for like more than, I think, 10, 20 years or whichever, I forget. But I basically said, well, because I knew that he's so rich in experience, like 10 plus years in Taekwondo, national champion of his country, I asked him like, hey, like, tell me, I understand now you have a high confidence in like your baseline model, which is like you have a baseline of like how to operate as a Taekwondo martial artist, right? So where is it that you start to, what's your marginal performance or like what's after the baseline? Like I understand you've mastered this baseline, but then where are you pushing the limits here, right? So we have to kind of, again, now I know folks who have a data science background or a machine learning background, they'll understand that a lot more. But for most folks in here, right, we gotta kind of develop these these styles of thinking because we're maneuvering across like billions and billions and even trillions of dollars in here, and it just helps to understand like how significant the analytics are on the screen here. The more I'm learning about analytics, the more I realize, like, man, this is actually really impactful stuff that we're analyzing in here. All these years, we don't, I didn't realize that, and I think we don't realize that, but these are big numbers here, right? Again, it goes back to the saying of we can't physically see 8.2 billion people, but for some reason we can see 8.2 billion people on a screen. That speaks very loudly. Anyways, uh, Ivan says, let's see. Mel says, and firms like Big Lots are filing bankruptcy. I mean, that's another spectrum, right? So, when we talk about bankruptcy and stuff, let me see. So another spectrum, right, Mel? Like, if we talk about the bell curve of like all companies out there, at least in the stock market, the vast majority is like 5 billion to let's just say 20 billion, right? Again, this is arbitrary numbers. We need to actually do a more objective analysis on that. And when you talk about Big Lots and stuff, it's just like a smaller, I'm guessing Big Lots is probably less than like 300 million. So like you could say it goes bankrupt, but going bankrupt, it doesn't necessarily represent the majority of entities out there, if that makes sense. So therefore, like if you put too much weight on the analysis of like, oh, Big Lots is going bankrupt, it represents the entire economy. I don't necessarily think that's true, but then we also need to dive into how big is Big Lots. I don't think Big Lots is publicly traded, is it? Publicly traded, so I can't really do the analysis. Maybe it was like Dollar Tree, then yeah, like Dollar Tree or Dollar Tree right here. If it was like Dollar Tree, this would be economically more significant because like it's in the 15 billion range, at least what the markets value it today, and it's rocking about 30 billion economics. So that's what I'm saying. Like it's the more, I mean, I guess the more analytical hours or work that I put into this, the more I realize how how far from, how various investor comments is quite, frankly speaking, it's very far from the truth, right? At least, maybe I have a bias, but I try to be as objective as possible. So that's what you have to be very careful with out there, talking to like different investors and kind of understand like, okay, who's really like, you know, like sticking to like consensus reality and stuff like that. But um, it's hard. It's hard to maneuver this space. And I think it takes years to really kind of do the analytical work of like, okay, you're experimenting with like, what is the market saying to what are the people saying, and when do the people line up when the markets are over exaggerated, right? So think of like the crypto boom that we had during the pandemic. That was like an over exaggeration of like crypto valuation, and consensus was kind of aligned to that. But the actual fundamentals of the business revenue for crypto companies, it wasn't really there. So it was just really a consensus period, a mania period, or euphoria period that us humans went through, and it helps to analyze and backtest that period and understand that those periods will come around over and over again. So whatever topic comes out next, whatever narrative that we want to, socially or animalistically follow next, hey, be my guest. We're gonna go and try and capitalize on it. So money speaks, in my opinion. That's the ultimate source of truth. If you want to look at other sources of information, be my guest, but figure out what the source of truth information is and try to stay as objective as possible. Okay, all right. Ivan says Capital wants to speak Mandarin. Yeah, apparently, right? Apparently this week it's speaking Mandarin. Yeah, I want to analyze that because it's like massive amount of money was made, especially like if you had like zero DTE options on Baba over here, those options appreciated significantly because that move just like like I wouldn't say out of nowhere, but explosively. Ivan says, Harris, my stomach turned inside out, and I start shaking by thinking that she may be the next president. Hey, I mean, that's I'll try not to keep it or no politics in here for me, but I try to think strategically, right? Like in terms of like what would China want in terms of like a president that is aware of their macro presence or not not aware of their macro presence, and so for us Americans, I think we need to think about the trade-offs between like is it are we focusing on domestic issues like taxes and and like like conflict between Bernard and Kay. I don't know. I'm just kidding. Or actual, a president like Trump who might be a little bit. It seems like might be a little bit, in my opinion, might be a little bit more aware of like macro moves that China is making. So again, it's this is big stuff that's happening at a macro level, in my opinion. And I think we got to put in the analytical work today for the next 2 hours to figure out what's going on. So let's jump right into it. Edward says, can you project how Baba may move over the next few weeks or months? In the near term, Baba is extended outside the Bollinger Bands on the daily. Yeah, yeah. So there's so much interpretation that we could do, and I think Baba is an excellent example because it's kind of like the China leader, right? I mean, if you filter it down, I mean, I guess you could say, was it 10 cent is the China leader? But based off the stock market and what we have, Bernard says, can you say China and not think of how Trump says China? I'm trying to think about what you just said there. Can you say China and not think of how Trump says China?
China, you got to talk about China.
Oh, this guy. I didn't think about that. Um, like I said, I think, man, they got a tough job. Being a president, I think they got a tough job because in one way, you want to educate your audience, which is the American population, to understand like, hey, look, what's important to you? Local, state level, domestic issues that we want to fix, or do you care about global like supremacy or empire race for macroeconomic stuff that has longer term benefits as well? But again, I'm not gonna go in there. I'm not interested in that stuff because that could get dirty, right? Like
Hey,
two.
Che, before I forget, did you say you were having an in-person event
I
for
am.
something?
I am. So in the next 30 days, let me look at the calendar right here. Is it today? October 27th on a Sunday is my next in-person event. I usually start marketing like 3 weeks before, so it hasn't happened yet, but we are targeting this date right here. So about 4 or 5 weeks from now. 1, 2, 3, 4, 5. 5 weeks from now, right? Yeah, unfortunately, I couldn't get Saturday. I wanted Saturday, but it's going to be on Sunday. We kind of have to compete for a space. We put down $1,100 for that space, so I need to really fill it up, and it fits upwards of like 150 people. So yes, I am throwing a party, and you guys would probably see the marketing. It'll fly by. But for today, let's get into the analytical work and talk about the question that Edward had, which is like, what's my projection for Alibaba, right? So okay, this is a obviously an event-driven pattern, right? Or an event-driven setup. And there's several layers that we have to analyze here. It's just like what we just said earlier about when you cast a vote. When you cast a vote to whichever president, we want to know if the president is aware of like critical components of the global economy. Like, are they aware at the global level, to the national level, to the state level, to the city level, and then to like my butt pocket level, right? The taxes that I have to pay at the individual level. Are they aware of every level and which what's their priority at every level? And then also not just like every level from like the global economy perspective or different layers of the economy perspective, but also the future economy, like the digital economy. Do they care about, like how do they view like, Amazon, Facebook, Google, and Microsoft, right? About, digital cloud infrastructure. Like that's a big category. Well, I think that's all, a president that knows about their current economy's infrastructure or the layers of their current economy's abstraction to the future economy and then also historical economy, right? Like what happened in like the 1800s with this empire, that empire. Like I think, a strong president or a strong persona with that type of profile would be really valuable. But that's a whole nother topic. Anyways, okay, so let's look at Alibaba, right? So what do we know? So this is sort of like a event pattern, right? And if if you said it was too high at $88 right there, China or Asian folks love the number eight. If you said it was too high at 88, right, it actually went a lot higher. So forecast wise, right, before we talk about the present state of the charts, Edward's asking the future state of the charts. And of course, it's like extended out of its Bollinger Bands. But this is a sort of like macro level event driven type of news, right? So remember, like when we talk about stocks in here, there's so many different situations that we come across. So what do we know about this situation? Because it's the stock market is one of the most complex chess game on the planet, and there's always so many different variations, and we have to kind of understand the tunes of the economy and narratives that are running, right? So what caused all China stocks to rally? So I think before we dive into BABA, Edward, let's take a step back. Let's take a step at maybe more of a little bit higher level, right? Not macro level. I guess you could say macro level, but let's look at just the FXI shares right here, right? iShares. So FXI, it's an ETF that basically represents the large cap ETFs of the stock market, right? Of the Asian of China stock market. So this gives us a pulse of like, okay, was it just Alibaba or was it more than just Alibaba? Obviously, what you see right here, it's a lot more than Alibaba. So this is one thing that the first step one of the few first steps that I like to take is like, oh, someone went off mute right there. Oh, I think it's Bella. Let me put Bella on mute. There we go. So as I was saying, one of the first steps I like to take is well, understanding the environment, right? What environment that we're in. So every week I issue that report to help me calibrate to what environment are we in? Are we in a green light environment? And yes, we're in a green light environment, and that green light environment was kickstarted, a week or two ago. Why am I forgetting? Well, I guess like so many days on this on planet Earth here, I'm forgetting. But basically, it was like last week, right? It was last 2 weeks ago. So going back to it, so FXI. So we know that the USA stock market. Again, we're talking about the historical narrative here. We're coming and we're going to zoom into where we are. So the USA stock market, it rallied. Fed cuts. I'm sorry, Fed cuts 50 basis points announced, and stock market rallies. Market leaders like not Nvidia, but like Facebook attempt to go into all-time highs. It actually did hit all-time highs. We have the FANGs rallying right now. We have the indices rallying right now. Then, okay, we have to follow the chronological narrative right here. Then China announces aggressive stimulus, and now a lot of China-related stocks starts to rally. So when we were looking at Alibaba, we knew that Alibaba ran quite a bit, but we want to take a step back and see, okay, is it the entire China market? And yes, we could confirm it right here, because if we look at FXI right here, this thing, broke out to new highs right here, even like this. Well, I mean, this you could ignore that line right there because that was just, I guess, 2 points make a trend line, so it could come back. So now we got to talk about forecast, right? Um, so now we know that it's not the level of this news or this catalyst. It's pretty large because it's affecting all China related stocks, right? So now we know that it's more macro related, more so than micro related, right? It's not individually did Alibaba do something for Alibaba to go up that high. It's actually just all China related stocks. And right now, I wouldn't say all China investors, but all investors or most investors or large investors are positioning heavily in China related stocks. Now, does it mean it'll keep going up? Possibly, but when things are extended like this, I don't like to play extended stuff. I like to be in an extended play and then start taking stuff off the table because we understand that in the stock market, things have a mean reversion nature to it, right? And sometimes you'd be surprised things don't mean revert as soon as you think. But this one definitely, I would say, is due for a mean reversion. But I think the maybe I might be underestimating the caliber of the news, right? So it potentially could go higher. I don't want to say what it cannot do, but let's now zoom into Alibaba and use it as like a case study example of like how could we forecast this, knowing what we know right now. So looking at Alibaba right here, right? What do we know? For the longest time, if we zoom out to the monthly, for the longest time, this thing was building up massive volume right here. So you guys already know it, right? It's almost like the first thing I look at is like the horizontal volume more so than the vertical volume, because I want to know where price action is really heavily focused. And we can see that, for the longest time, it's been within this range right here, between, oh, well, what am I drawing? Basically this range right here. So we know for the longest time around $80, right? The number eight. Asians love the number eight. Around $80. That, there's been an accumulation of action. Like for the longest time this thing's ever been traded, right? Since IPO right here in 2015, or 2014, I'm sorry, it says 2014 right there. In 2014 IPO, the largest amount of volume that this stock has ever traded was basically right here. So any large accumulation that has happened in stock has happened around this price point right here. So we know that now with the breakout, there's confirmation that this is support area. So we're talking about forecasting, right? So if this thing, from a monthly perspective, Edward, if this thing were to go down, I think we could forecast that it's confidently it'll I guess if we were to forecast downside first, we have confidence that the $80 will hold, right? From a bigger picture perspective. So again, we're just forecasting what's the downside, from a monthly chart perspective. Okay, cool. Now that we know that there's heavy accumulation around $80, let's now zoom into the daily because now I actually want to trade it, right? Let's say you want to trade it and you're like, oh man, ideally the trade entry was basically like $90, right? If you had the confidence to buy the high, right? You buy at $90, but that's hard for a lot of people, right? If you bought right there, I mean, 88 would have been nice too, but $90 was like the price right there. If you bought $90, right, you had the confidence to buy it, and you knew that support was around, $80 right here, right, and then it launches. Now, the hard part is that you might think like, oh, that's already an extended move right there, and you probably would have sold right there, right? And because the next day you're like, ah, yep, that was a smart move, it went down. But again, we don't know the caliber of this information, and things run, at this rate it typically runs for like 30 60 days, 30 60 90 days, right? And so boom, it launches up again, and now you just feel like an like a moron or whatever, right? You're just like, oh man. So now it's gone really, high, even higher, and can it go higher? Possibly. I don't want to say it can or cannot do this and that, but how do we forecast from here and what could happen? So it is extended, but this caliber of news is very large scale. It's very macro level, right? Because it has to do with like China printing money or stimulus. And then, we also saw the RMB spike up a little bit as well. So if you pull up RMB over here, RMB USD, you can see that it's gone up a bit. And so again, I'm trying to understand the capital flow, right? So if we look at, this is the 1 year right here. You see how it's gone up a bit. So the logic that I have in my mind as to why it went up is like, okay, well, for USA investors to really get exposure to China related equities, they have to kind of convert. So they have to go from USD, or they have to, let's say, sell their stock in USA stock to convert to USD, to then convert to Chinese RMB, to then RMB, why did I put RNB, RMB, sorry, and then from there convert to China equities, right? So that's, again, that's just my thought process on that. Anyways, going back to it. So What we see, but then again, I mean, with the USA, you could basically get exposure to China-related stocks. But for some of those higher precision investors, right? Some maybe like private equity China-related investors in the USA, they would actually have to go through that conversion. So maybe that could be an explanation, but typically like a stimulus should bring the RMB down, right? If we think about it, because you're if you're going to print more money or whichever. So ideally, the buy point would have been the breakout point right here. If you have the guts to buy it. I mean, this is like directional trading right here. Momentum trading requires you to do stuff like that. But it would have launched up, and it would have been best if like right on the pop that's correct. Sell 20%, right? 20%, see where it could go, right? It's outside the Bollinger Band, but again, you need to ask yourself the question like, am I the one saying that it's too high in my mind, right? Because the stock market apparently is thinking different here. The players that are playing the game are FOMOing into this position, right? Because they're thinking bigger picture. This thing could go to $200, and I think that's true. I think this is the spike up, and in which case it needs to correct. But the question is, how far down could it correct? It could correct down to like the 100 psychological number right here, right? It could correct down to even $95 here, where the prior breakout held right here, right? It could correct back down to like the $90 level, right? But these are all the levels that it could literally correct down to. So the psychological one, oh whoa, the psychological $100 area, the prior breakout area where it consolidated a little bit, uh, and then this the prior resistance point right here, which is basically right there. Prior resistance becomes support, right? So these are all the areas where it could pull back to, and then you could think about strategic buy areas, right? That's just strategic buy areas. Now, in a scenario where it keeps going up, because that could also be a scenario. This requires maybe a little bit more precision, and I'll probably use the body of the candle. So the body of the candle, I'll use the top of the candle, and I'll use the bottom body to basically now put another forecast right here. So let's change this one. Let's put this one as a green forecast, right? And then the blue ones would be red, where it could bounce off of. But let's say it actually maintains this body. It maintains this body, and it actually continues to go higher. So another scenario is that it starts to go like this, right? And then you kind of know like, oh yeah, someone's starting to accumulate, right? And then it starts to move higher. So that could be another possible scenario. Now another scenario would be like, let's say if it breaks the top of this candle right here, right? To like immediately on Monday, then you know that it has another burst of momentum that could even go higher. So those are all the scenarios right there if we were to forecast, Edward. Now, there's one more scenario we didn't forecast, which is like the very possible, whether it's sideways, whether it's higher, whether it's lower or pullback, or just that was a fake move, right? Investors just like, oh, never mind, I changed my mind. So again, because when these investors get into position, you got to think like, we don't know if they're like long-term players or like short-term players that are influencing this stock in the near term here, but these are all the possible scenarios that again, you kind of have to make the choice when the stock price goes to that point. But now we know point to point by just playing, whole dollar levels like 100, 95, 90, right? Prior support or prior resistance becomes support, which is this right here, to forecasting forward where it could potentially go. So it's not easy. I don't think it's easy at all, but it took me like a while to kind of like, I guess, like register in my mind of like the possible scenarios. But hopefully this helps. I don't know, Edward, you let me know. Was this helpful, guys? Like in terms of like how I think about prices getting forecasted. It's really just like when stuff like this, we don't have much information. Like yes, we know the narrative is like, okay, China stocks, government narrative, stimulus, big catalyst, all China stocks are moving. Now one is like, we got to put a time frame on it. How big is this news, right? But then how do you know how to measure the relative weight of that news across the world? Because are you experienced as a macro interest rate trader? Do you understand the caliber of interest rate information? How big of that information and how much could it impact the stock? And then there's also the valuation perspective, right? Where Alibaba is trading only like 1.7 times price to sales over here. Like it's absolutely cheap because it's doing a lot of billions in economics right here, 131 billion. So now you know the relative valuation. So these investors that pile in here, They might even be long-term investors who are just dumping in and wanting to hold for a very long time. Or if you do a investor analysis, like last week, we looked up the top performing hedge fund manager, and it was like David Tepper, right? We literally looked into David Tepper's portfolio last week, and his biggest position is Alibaba. He's managing 6 billion right here, and his biggest position is Alibaba. So we go into his portfolio right here. We scroll down. Sorry, it's like it's pulling a lot of data, right? And we look at the weighting, and last week we saw that his biggest position was Alibaba. Well, like this guy performs, right? So now since he's right on that one, what else is he holding? Man, maybe we should just buy all these stocks right here. This is a fantastic portfolio, actually. I like everything that I'm seeing right here. He's got a massive exposure to China, but like China high quality stocks. So sometimes looking at a billionaire portfolio like this, again, you learn one thing is like you learn how to manage $6 billion, but the other thing is like you learn about what they perceive and how they perceive and understand the world. And so if this guy continues to perform, let's continue to observe his portfolio so that we can mimic him and start, capturing positive inflation for ourselves too, right? So yeah, this is a very, very high quality analysis. I do not see this type of analysis across the internet. I mean, for me, it's like I'm deciphering and learning from the rest of the internet, and then every Sunday I consolidate it here. So I know that it's pretty darn potent in here every Sunday, and it continues to be that way. That's why, it can't be fully exposed to the internet, right? Um, anyways, let me any other thoughts on Alibaba, guys? Should we dive any deeper, or what are you guys thinking? Let me know if you need more or forecast wise, because this is all the possible direction, and it's helpful to know this because every point that it hits is another decision point, right? Because if it pulls back, then okay, it's in pullback mode. The question now is like, how far can it pull back? 95, 100, 95, 90, right? If it's in pullback mode. If it's in reversal mode, okay, how far can it reverse down? If it's in sideways consolidation mode, okay, how long does it consolidate for? And we'll continue to go from there. If it's continued its momentum path, meaning it could go even higher, okay, how high can it go? So we're trying to assess like every situation, I guess. But anyways, that's Alibaba. Shall we start looking at other stocks? I also like Pinduoduo. I also have it in here. This one I think could be a fantastic mover. I would probably focus more on this one than Alibaba. Like this one's like that ultra high growth one. And I'd be very interested to know who's actually holding on to this one and who's benefiting from Pinduoduo, right? Because that's actually he's also got a sizable position here. David Tepper's got 4.1% in Pinduoduo. So let's go over here and let's do some analysis. I was thinking the same thing. I like PDD. Yeah, I think it's safe to say like you can do like no, I shouldn't recommend that. I mean, if you're gonna play options, like yeah, again, if you're good in the near term, you could really price your options right with the time frame. If not, then I'd try to go like 3, 6, 9, 12 months. Again, not investment advice here, guys. It's just infotainment. But yeah, that's how I would look at it to capitalize on this move here, right? Because I think the move is going to pull back, of course. And when it pulls back, I think the move's going to take like maybe 30, 60 days. Like we again, maybe the narrative changes, right? Like that could also be a possibility. Um, Maybe like it could cause volatility in the USA stock market because now it's causing capital flight. What I mean by capital flight is value repositioning itself. So suddenly China, okay, one, the USA from a macro level, we announced a 50 basis point cut. So stocks rally, right? And then out of nowhere, China's like, no, we can't we got to make a move too. And so for the first time in a while, they announced stimulus. So then now it could potentially create volatility because it could cause USA institutions to liquidate their USA holdings because they're saying, hey, look, like from a macro perspective, China is printing money again. We got to actually go buy Chinese equities. So now you might see selling of USA stocks and then capital flows to China stocks. So that could create, macro volatility. I don't know, but the only way we will know is just really look at the markets in real time because this is the source of truth right here, right? Anything else is like, a source of like derivative truth or a source of opinion. The news is a source of opinion. Okay. So going back to PDD, and let's see, I was thinking the same. Okay, Ivan says I made a weekly call strike price at 100 for Alibaba. I was surprised how high it went. Baba made a move like that in 2016. It went 35% up in 2 waves. Yeah, so you could also apply like a wave theory analysis as well, right? That could be like the initial impulse wave move. Um, hmm, I think that's the mailman at my door. Let me see. Sorry. Uh, Let me just see. Oh, someone's at my door. Give me 1 second. Oh, it's the it's folks solicit. Okay, hold on. Sorry guys. Let me turn this off. There you go. All right, it's just people people soliciting stuff. Anyways, as I was saying, PDD. I think we covered Baba already. Now PDD. So going into next week, actually I wanted to look at the ownership structure. So going into PDD here, what we see? What do we see? So this one we don't have, right? The top direct holders because it's an ADR. Uh, oh man, they're still knocking. Give me 1 second. They should know that I don't answer these type of yeah, I'll leave them hanging. Anyways, as I was saying, so looking at we don't have the direct holders, but we got like the top fund holders over here. So what do we see? We see that shares outstanding, we got 2.5% with this company right here. This one's a pretty big fund. So shares outstanding versus total asset managed AUM. So, I mean, that's pretty significant. I'd probably dig deeper into this one. Uh, HSG, this one right here, total assets 78%. Let's open that one up. This one right here, HHLR Advisors, 29%. Ooh, wow. But percentage of shares outstanding. So they're willing to bet quite a bit, right? 29%, 13%. Did I open that one up? This one, that could be like Sequoia Capital right there. What else? What else? 25%. Okay, cool. So let's take a look. Let's see what we got right here. Let me see. These folks are still outside my door. They're pretty persistent. Okay. It's interesting. Like some of these folks they go door knocking. They're pretty persistent. Okay. Sorry. Let's look at this one. So this one is managing 128 billion, right? We know they got a big position in Pinduoduo. I also want to see what else are they expressing in their portfolio. I mean, 126 billion, sorry, 128 billion is a lot of money. So let's take a look. Let's start rearranging this. And we can see right here their biggest position is Nvidia, 7%, right? And Pinduoduo is in here as well. So remember, when you get to that 100 billionaire status someday, you got to think about how we going to structure our portfolio, right? It's going to be not an easy job. There's also Coupang here, which I'm reminded because I'm interested in this company too. I want to look at that one real quick. Let me just see where that one's at. Cart, Cart is also good. Cart, recent IPO hasn't had a big run yet. So again, big IPO sold off and started a run. So this one might be interesting, right? Instacart. But let's look at the company that I just said. What was it? Coupang, because I was interested in that one as well because that's like Korean markets, so it's a little bit different. But I know Stanley Druckenmiller has a big position in that one. So you know what's interesting? Like we should just like focus on like what the big billionaires are doing. Like at this point, like it almost seems like why rely on anyone else? Like let's just focus on what the billionaires are doing, and then that way we could just already generate like really good trade ideas every week. So Coupang looks fantastic, right? Coupang. I don't know how to pronounce it. I'm not Korean, but this one looks fantastic, right? You got quite a bit of accumulation right there, and prices are moving higher here. It recently hit not an all-time high, but a recent high. It's coming off of a nice base right here, right? It's probably stage two right there. It's definitely moved from stage one to stage two. Now, does this mean it's going to run? Not necessarily, but it's making meaningful progress. And so that's really what I look for. I look for just because the stock, okay, like, yeah, we want stocks that go up, but you can't forget risk management, right? Risk management is like, is the stock making meaningful progress? Is it still above this breakout line? Because if it goes back below, that's where you have to get out, right? So you could say like, the breakout line being like something like right there, right? That's my stop right there. If it goes below this price, I'm out because you're trying to just risk a little bit to see if it could continue. And if it continues in your favor, you continue to hold it. So you have to, there's phases to it, right? One is like step one body of knowledge is like how to identify a stock to play and get in and where to get in. Okay, boom, step one done. Now, step two, which is like another book, is once you're in position, how do I manage the position and what news or whatever is impacting the stock, how do I behave around it, right? You have to think about how do I manage the position. And then step three is a whole nother book, which is like how do I get out of position on like, proper gains properly, like, take 20% off or 50% off or 100% off because, it didn't, if in, it didn't hold this price point or whichever, right? So you gotta understand the I guess the flow here, which is like step one, how do I get into a stock? That's a lot to consider. Step two is like once I'm in the stock, how do I manage the stock? Also a lot to consider. And then step three, when I get out of stock, why did I get out of stock? Was it to protect my principal or was it to take a good gain? Uh, I think we just have to like, you know, crunch these numbers over and over in our heads. But this one's looking fantastic, right? Fantastic for several reasons. I mean, we can look at the 200-day moving average right there, right? It dipped on earnings very hard, but it recovered. It shot down on earnings, came back up, rallied back up, and then pushed to new highs. That's showing that there's a willing buyer, right? So basically, what we see on here is we see a pool of players there and a pool of players here. And so when prices, it had earnings, it dipped to this second pool right here. Again, the pool right here, right? It dipped down to this pool. It got bought up quickly right on the 200-day moving average. So we like to see confluence, right? Like, multiple areas of activity. And it came back up and then started to consolidate and now it's moving higher because it's showing that this player succeeded and this player succeeded. So in other words, excuse me, the reason why I think it looks good from what I could see from the levels of volume right here, right? I could see that this is whale one, whale two right here, right? Whale one succeeded in carrying the price, also the 200-day moving average, right? And then came up to whale two right here, right? And now it's exploding away. So it's progressing. I like that. Now, if it stops progressing and it falls back into this liquidity pool, then I might just sell it, right? Or might even hold. But I know that there's massive support basically right here. I just know that there's massive support here, massive activity here. So if you could pinpoint that activity, then you feel a little bit more confident, right? So I love it. This one looks really good, and we want to look at who's a big holder of this. I think I mean, Stanley Druckenmiller's up there, but I don't think he's larger than some of these larger funds out there. But it's also worth taking a look. We were looking at Penduoduo. I know I'm going everywhere, but let's look at Coupang real quick. Let's go in here, CPNG, and there we go. Is there another person knocking on my door? Okay, no, we're good. Ownership. I just want to see this real quick and go down. We see that we know Stanley Druckenmiller is in here somewhere. At least last time I checked. If not, then he must have changed position. I don't see him in here. Maybe because he's not holding a big enough position, but it's still in his portfolio. So these are the larger funds, right? Like these guys are like the big players here, and you can see conviction in. Well, this one's probably like a VC or something. It's like 78% of their portfolio. They just never sold. 67%. Man, geez. Uh, this seems like I don't know. I mean, it's a UK entity, but you could see the different players. So let's go Stanley Druckenmiller because I'd be curious to see what's in his portfolio these days. So let's take a look. Let's look at the current portfolio and let's go down. So you see Coupang is still in there. Give it 1 second. Current portfolio. Loading, and still loading. So be mindful, guys. It's pulling a lot of data, right? That's why it's a little bit slow. It's not because the internet's slow. But look, so Coupang, so he does have a big position, but it's only actually wait. Actually, it's 8% of his portfolio. But in terms of like the shares outstanding that he owns, he's a less than 1% owner, but he's betting pretty big on it. The other one that he really likes is this Coherent Corp right here, Coherent Corp. But yeah, this is a thesis right here. He's got calls on Philip Morris over here as well. That's interesting. But yeah, this is a high conviction bet for him because we if you know his style, you follow him, you understand how he thinks. He likes to make decently high conviction bets, and this is one of the highest ones because it's 7.88% of his portfolio. Anyways, uh, pretty good, huh? I like that one. I like this one for, I like to join Stanley. I think, this could be great for us. Let's look at this fundamentally. Like fundamentally, this is one is very impressive. And it's cheap. Oh my God, it's so cheap. Relatively cheap. Price to sales wise, it's only 1.64. And it recently became profitable and it has 24 billion in economics. It's a Korean company, right? So this is very impressive. The only thing that doesn't look too good is that they do have a little bit of debt, but that's okay. It could be debt for growth. But we could also look under the hood and see, what else is going on. But I mean, I'm already liking the price action here because from a monthly chart right here that we're looking at, we already see a lot of activity right here. So we know a buyer is interested right there, and we know guys like Stanley Druckenmiller is participating, and we also know the rest of the ownership table there as well. Uh, what do I want to see in here? I mean, do you guys want me to go into the fundamentals of this, or should we just keep it at technicals? If you guys want to learn the cash flow game as well, I think that's also important. But you guys let me know. If there's no interest there, I won't dive into that part. But I think it'd be great to kind of know at a high level like how much cash they have on hand. Okay, fundamentals. How often do you do leaps? All the time. All the time, Ivan. I mean, leaps are like a great way to like own shares. Oh, like levered shares, I guess you could say. It's a favorite. It's definitely a favorite of mine. Okay, so fundamentals. So I also love the fact that shares outstanding has not been increasing. Let's scroll down to the statements right here. And so this is the income statement right here, right? I know it's beautiful because we got it from FactSet here, right? So this is like high quality financial data at this point. So I love that FinViz, through my journey and adventures with it, intellectual adventures with it, it's been improving itself all along. So I love this product. I basically named this investment club after this product. So it's the best product ever. So income statement wise, right? So we can see that this was over the years as well, right? They're giving us 6 years of total revenue right here. So there's the income statement, there's the balance sheet, and there's the cash flow statement. I mean, what's good to see is total revenue go up. And then what else could we see? Margins wise, I mean, yeah, we can look at that too. Margins are pretty, I mean, 25% margin, gross margin. But I mean, income statement, I just want to take a quick look. Like profitability wise, it recently became very profitable in 2023. Now remember what Amazon did, right? Amazon for the longest time, it purposefully showed losses, right? And then the value accumulated in its balance sheet. Why? Pop quiz question for you folks here. Why would a corporation like Amazon show losses in their income statement year over year for so many years? Pop quiz. If you can answer that, you're talented in my opinion. Why? Because now you're thinking a lot. I'm forcing you to think a little bit more complex. Yeah, reinvestment, but why would an entity take losses? Let's pull up Amazon. Uh, oh shoot. Yes, exactly, exactly, and that's what Amazon did for the longest time. I almost forgot where. Let's pull up Amazon because it's a very good exercise to know because we know how these entities operate, right? So I'll show you. I'll show you. This is the stock price. Again, this is a deeper analysis of fundamental analysis of Amazon, right? So what I'm going to do is I'm going to show the balance sheet value, and we're going to go to uh, it's good practice here. Total, not total assets, but total. Where is it? Where is it? Where is it? Total. There you go. It's the total stockholders' equity, and we're going to see the income statement, and we're going to show revenue. And this should be a fascinating exercise, if I recall. Maybe it doesn't show. Um, it wasn't revenue, it's income. Why did I do sales? Sales is different, right? Net income is what we want. So check this out. Look at that. Look at that. So, okay, very fascinating, right? And let me bust out the annotation. This is powerful knowledge right here. And I strive to equip you folks with powerful knowledge because I'd be wasting my time if I'm not focusing on powerful knowledge. Carry forward losses. You can carry forward losses to the years with predictable higher taxes. They are tax credits that you can apply on gains in the future. Yep, 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 yep. So Evan's already on his way to become a billionaire. Okay, so the orange line is the net income line, right? And they really only started taking gains like profit right here around 2018 right here. Now I know you can't see I guess this part right here, but in some years or most years, Amazon basically did zero gains, zero profit. Now look at the green line. The green line is the total shareholder equity, the balance sheet. Every year the balance sheet kept growing, right? But they kept on showing losses. This is how you identify when an entity is accumulating value because the income statement, they could purposefully, I mean, strategically not show it on the income statement. All you see is losses. So earnings aren't everything, right? I know we focus on earnings quarterly, but earnings is just one thing to look at. We got to look at the balance sheet, and if the balance sheet is accumulating value, at least again, I might be an amateur here in analyzing this. Maybe there are more professional accountants out there that could teach me better, but I'm learning openly with you guys. So it's fascinating to see stuff like this. What is stockholder equity? I like the I V says I that the paper value of the positions. No, so stockholder equity is like the net after your all your assets minus all your liabilities. You get it? So you could look at the equation. I see. So that's like your net value, right? So total 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 shareholders equity formula, right? So look at the formula. If you don't know what it is, just look up the formula. And oh, I guess yeah, here, that's the formula right there. All right, you got Gemini, Google's AI Gemini to help us out. So shareholders equity is all your assets that has value minus all your liabilities, all your debt and stuff, right? So if we go back to the picture, you can see that you know this like really all of its time this range right here, right? It's been like zero to slash losses, right? But the balance sheet, which is the green, started going up around this time 2016. 2016, well, I mean, okay, the data is kind of skewed right here, so you can't really see it, but they started really accumulating value in 2016. And so, the question is, when the stock prices tank, but the balance sheet keeps growing right here, that's like alpha, right? So we could do this type of analysis, but it's also slower because we're analyzing at one stock at a time, right? So let me show you real quick. If I switch over to the blue right here, you can see the stock price went down, but the balance sheet went up this year, these years within this range, right? So that would have been like a deep value play right there. Well, not deep value, but like a relative value play, relative market value play. Uh, Hopefully this is helpful analysis because we have to apply it to Coupang now, right? And understand Coupang's balance sheet. Trust me, it sounds like a lot, but if you work with me and hang out with me long enough, we do this long enough, you start to realize like it's actually pretty. It's not that hard, right? And it's because it's not hard because you're practicing with me, right? And that's what I strive to do because when I'm on calls with like startups or whatever, like I want to understand these things. And the better I understand, then the better, you're increasing your probability of being a successful investor, so that you don't make the mistakes like that I spotted a lie right there, and they said something else. So, okay, lots of comments here. V says, but how do they take advantage of the tax benefits? Isn't it through putting it back into their business? Yeah, like they just hire more, like expenses for a corporate entity is like more human capital. So they hire more employees. So they're paying employees out more, right? I mean, of course, not I mean, strategically paying them out more. That's an expense, right? Hey, look, I have to pay this employee that brought my company forward, and but then they're marked as an expense, right? We understand these accounting tactics long enough, and we realize like anyone could do this. Evan says, I'd never done it, so I have limited knowledge, but you can have contractors and such that you filter finances to companies that are based in special economic zones like Cayman Islands. Man, so yeah, what you talk about is like borderline gray area corporate gray area stuff. Let's just call that, right? I don't want to use the wrong words, but it's something that we talk about with the two butt pockets of the central bank and the governments, right? One pocket fills the other pocket, and it's also again if you know equity history, I forgot what company, but there were companies in the past that were part of like pump and dump schemes where one corporation was taking all the profits while another corporation that no one knew about was taking all the losses. So yes, that's illegal, right? But and this is where us investors we have to analyze these entities and understand where the money flows. Just as much as like if you were like a technology investor, you want to understand where the technology, architectural flows and data flows are, because that also shows you where the AI is flowing. So, you're talking to uh, Kay, who has really learned about different value flows out there, right? Because at this point in my life, I could determine capital flows via the stock market price action. I could determine, fundamental cash flow in the business and where the cash flow is flowing. And then now I could determine technology flows, where the data is flowing, right? Very invisible stuff, very intangible stuff, but it takes, quite a bit of training to get to that point. So when you get to a state of where you can see like data and models flowing, like that's like a next level investor right there. Which, it's like at that point I should go really fundraise and do some, larger scale VC. But it's still I still feel relatively young, but that's also like a subjective bias where I'm holding myself back, saying, hey, you're still too young. But really, like if anyone knows, like really, really knows, like progress is like mental. Like anyone in here could choose to become a CEO tomorrow if you mentally decide. But you know what's keeping us from doing it? We're afraid. We're all afraid. I'm afraid too. We're afraid of failing. But I just think you could go, anyone on this planet could go so far in this life if you just decide to make that switch. Like you just wake up one day and you just said, yeah, I'm a CEO or whatever. uh, V says, I don't want to be CEO, only board of directors, board member. So you just want to be an investor essentially, right? An investor that advises passively. But to get to that level, you have to build up your reputation. And to build up your reputation, you essentially have to act like a CEO, right? Because as a CEO, you're always talking to like the markets, companies, everyone. You're influencing them. You basically got to be like Elon Musk. So the path to becoming a board of directors is to essentially be a CEO of your personal brand and taking your personal brand to its best limits in order for others to consider you of value to be a board member. So in a way, it's like to get to that state, you got to be like an outstanding individual regardless. At least I think so. Because it's like when really good companies are inviting you to be their board, then the question is like, how'd you get there? What hustle did you take to get there? Again, this is all important because when we dive into entity analysis that we're doing here, right? We're not we're what we're looking at here on the screen is more like balance sheet accounting analysis, right? Balance sheet and net income analysis. But then what we're talking about here is like also individual record analysis, which you also have to do if you really want to get granular with understanding your entities, right? So like what track record did they come from? What have they done, and what board seats have they taken, et cetera, et cetera. Uh, Evan says if Kamala gets in and makes Amazon pay taxes on their equity, they can mitigate it. I don't really know, just sort of guessing, not accounting advice. Yeah, I know. I don't know myself either, but I know enough to see like, okay, there's representation of value here, and the balance sheet is growing. Now, you also will see in the stock market like companies that it's really like the smaller ones, like the penny stocks, where it's like you have like accounting fraud, right? Where it's like, hey, the value that they said in the balance sheet was actually not there, and they were just like printing some sort of numbers. Now that becomes a red flag, and then you see the reflection in the stock price and how investors behave around that. So there's a lot to learn here, and you're not going to get it all right away, but I don't know. This is like a body of knowledge that I've developed for myself. I don't want to let go. Like this is probably what like defines who I am, I guess, at this point. So I know I gotta practice every Sunday, and so well, I think you guys have me forever here until my last breath. Shoot, I mean, or maybe I just retire one day, right? But I'd be kind of bored too. I'd be like, I'd be like Bernard, right? Like retired and like so bored, like he's in my investment club. I'm just kidding, Bernard. Okay. V says, can we look at the same thing for Coupang? Yes, I want to look at the fundamentals for Coupang. So let's do that. Let's do the same analysis, but with Coupang. Now that you understand that like Amazon could be, positioning their income statement in a certain way. Concerts as career. I know, right? Like at what what would you do when you retire? Like I honestly think I would still do this because it's kind of fun for me. And I probably try to do it in person again, maybe like once a month, but I don't know. We'll just keep going. We'll see. Sky's the limit, right? Uh, Absolutely. This is why I am here to learn with the best. I wouldn't say I'm the best, but I'm trying to learn and become better. V says, I never plan to retire. I prefer the term transition to do what we love to do. Yeah, yeah, I really think it's that as well. So let's go to Coupon. And now that I have Coupon right here, let's go to the interactive chart. Again, we're expanding our knowledge right here. And so I think Ivan went off mute, so I'm going to mute Ivan, unless Ivan, you had something to say. And then now we're looking at Coupon, and this is the price right here. And we're going to go down to the income statement, and we're going to pull out net income because we know that they recently, right, recently, and this is, hold on, let me see, 2022. So yeah, they recently, 2023, and the zero lines right here. I know it's a lot, you got to practice it with your eyes, but the zero line is basically right here, right? This is the, and we're looking at this side, right? Because we're adding, variables to this two-dimensional chart. How do I close this one out? Okay, there we go. So that's one. So we got the net income. Then we go over here, balance sheet, and we just wanted to see the total stockholders' equity, right? So let's see. So value, so stockholder equity, probably zero line right here as well. It's been going up, right? So this is all, let me switch this to, where's the quarterly? This is on annual, so I'm gonna go, oh, you could do months now. Hold on, let's do months. That wasn't there before, but all right. We got it by, it looks like by the month. Okay, so now we got our analytical flow right here, or chart. Now we have to do analytics, right? You got the outcome of the chart. Now you got to do the brain work. This is the last mile work that you have to get it to your brain to learn. I love what we do here every Sunday because it's truly the last mile of intelligence. The last mile of intelligence is that we're processing, the final. This is the final chart right here. What you see right here is the final chart of the information. Now we have to process it. Okay. So what we know with the blue, right? The blue is the stock price, and the zero lines right here. So the zero line is for, I'm guessing, both the orange and the green, right? In which case the orange represents the balance sheet. So I'll put the balance sheet. And then this one, the green, represents the net income, how much money they took home. So zero line, so they started becoming profitable in 2023, January, February, March, April. April 2023, they started to be profitable because of, the delta right here, right? And their balance sheet, uh, again, zero line was like right here. So their balance sheet went sideways, and then recently the balance sheet hit a new higher value right here, right? So the balance sheet got bigger around this time right here. Now, stock price, this is the price right here. It's still, it's still lower, right? It's still in this trading range, but it recently elevated to here now. So this is progress right here, right? From A to B. So stock price made progress because that B went from A to B, and maybe I should switch colors. Go to red. It went from A and it went to B. So it made progress right there, right? So that's the stock price made progress, and we also know that they went from A, right, negative right here, to B, to positive territory right here with its net income statement. And then for the balance sheet in orange right here, we know it went from A, which is like same, it was actually losing value, but now it's slightly positive value. So it's at B now. So it made progress. So it made progress on its balance sheet, on its income statement, and the stock price as well. And now we know who's a player that's involved. I think it's still early, but if you're gonna play something like this, you gotta think really long term out, right? So I like this. I mean, I like what I see. Now, we didn't look at a debt. I mean, actually, no, we did look at a debt. So a function of its total shareholder equity, right, is also the liabilities right here. So they now have more, probably either revenue increase or they reduce their liabilities. So that it could be either side, right? We got to think about that. But we definitely see value has gone up and prices have also made the meaningful reflection as well. So that's what we know about the balance sheet. And we know it's positive, which is good. We know the income is positive as well. And we know the shares dilution is that they're not diluting, shareholders are not making stupid decisions against us as the investors. So I think it looks pretty good. I think, the story looks good. It's just the action in the stock market or the price here is not really super active yet. But we also know now at the macro level, there's also the rates, right? Interest rates or stimulus in Asia. So if China being the head of the dragon in Asia, right, pushing prices up, then I also think it could impact other companies like Coupang. but it looks like this one's USA. It's not an ADR. Are they HQ in USA now? Let me see. Let's take a look. I mean, fundamentally, I like what I'm seeing here. I could see that it's gaining traction in the the Korean markets. I hear this is the biggest Korean. I mean, we could always do research on this, right? Um, let's see. Let's do it. Let's see. Because we got powerful LLM technologies now. Coupang company history, right? I mean, we probably get right there. See, look at AI overview right here. So Coupang is South Korea's e-commerce company that has grown to become the largest online marketplace in the country. It is also called the Amazon of South Korea. There you go. Right? I am creating an investment thesis about a company and I've dissected it. I see again increase in balance sheet value, right? Increase in price, stock market price, which is good. Investors are holding. Increase in sales, which is good. I see, stable shares outstanding. I see, strong investors participating, like Stanley Druckenmiller. It's all the right. It's hitting all the right flags for me, all the green flags for me to consider. Now it does have a little bit of debt, right? But it's not perfect, and the valuation wise is only 1.64, in which case Asian markets like China are increasing in multiplier value. So I'm thinking from a head of the dragon to the body of the dragon, right? The other Asian countries, I think this is going to impact it as well. So there you go. We just developed a very strong thesis, and we got it down to like granular levels of like where the price action is hanging out. So as long and then now risk management, right? As long as it's above 20, I stay in. If it's below 20, I get out. But if it goes back above 20, I get back in. So that's the rule right there. That's the investment rule that I set. Yeah, Neo is also part of China. So I mean, all Chinese stocks look really good right now, right? But we're doing like this sort of like granular analysis here, so it's like kind of slowing me down in terms of like looking at many stocks, but that's okay. This is what we come in here to practice every week until we become, masters of analysis, analytical work, and then all, the money that you make, now you know what you're investing into with a process, right? Like how you look at a stock and stuff like that. But again, it has to be practice because there's no like you could recall all this information right off the bat. It's literally like we're in this together. this is this is literally what it looks like to be an investor. I've come to realize, which is like we have to do this, such critical analysis or analytical work to come to a conclusion to make a decision. Or you could be more of a speculator, a gambler, and be like, oh, I'm just going to throw my money here, here, and here. That could work too. That could work too in an environment where everything's going up. So it's true. It's true that even like a 6-year-old could make money, right, by just picking stocks that everybody likes because that stock might be going under, consensus and stuff. But let's look at more stocks, guys. Let me know. Can we close out Coupang now? We did a pretty decently thorough. I didn't do a super ultra thorough, but a decently thorough analysis of Coupang. We could look at other companies if you guys like, or if you want me to go deeper, we definitely can. All right, we could then read about the press releases, all the corporate announcements, et cetera, et cetera. But again, if you want to cover more stocks, we can't go that deep. V says I really like focusing on what the whales are looking at because we are training to be remoras. I don't know remoras. I don't know what that is, but is that a name of a whale? That sounds like it. When you're a whale, right? I believe so the techniques that we talk about in here, it should suffice up to like, well, now that I think I was gonna say 100 million, but it actually would suffice upwards of like billions actually. So this is the same skill set that I believe could still be done even with like $1 billion. So yeah, like I guess it's pretty darn scalable if you think about it. Huh. That's something new right there I learned. So yeah, this is an ultra scalable skill set right here. This is like scaling you because remember at the top of the pyramid, if you're Jensen Huang, all you're doing is taking Zoom and looking at analytics. So then what's that say? It's saying how do you become a really good analytics individual? Because if you're really good with analytics, then now you know like how just the global economy functions, and you make valuable decisions that just pay you dividends, massive, accelerated dividends in time. So it is that is economics, I guess. The making decisions around analytics, making choices. I love it. Remora are fish that feed off the whales. Huh. I didn't know there was fish that feed off the whale. Oh, feed off the whales. Oh, gotcha. I was thinking the other way. Or maybe better analogy is learning to surf the big wave of economic excitement. Yeah, and economics excitement is just a collection of like human excitement, right? Economic excitement, economics means transactions or choices. So economic excitement, so choice excitement. So aggregate collection of like people getting excited about Beyond Meat or whatever stock that comes out, right? But the only way for us to detect the excitement is to do again, yet again, the analytical work every week. So it pays to, come in here and just check up on what Reddit's doing because I like Reddit, remember, right? And it's back, it's again, it failed this price area right here, which was basically like they failed to break out right here. So of course it's going to be bearish, but it's still early. Like I talked to my fellow millennial peers, and they're like, "Oh, I didn't know Reddit would is IPO. I didn't know I could buy the stock." So I think from a consensus perspective, like IPO hasn't really hit millennials in their realization that this is IPO. So I think this one has still yet to make a mega run, but it's just not happening yet, right? So and the only way to know is just to constantly come back and check prices, or you set alerts. The pros they set alerts, right? You set alerts and when it goes over a certain price, then you start paying attention to it. So that's what you should be doing as best practice, which is setting alerts on like every stock that you like. Rubric. That way you don't miss out on the action, right? Because there's like thousands of stocks to look at. So Rubrik, another high-end enterprise software company. What do we see right here, guys? What's the trade right here? Evan, my top student, it seems like. I'm just kidding. What do you guys think? What do you think we should do right here? What do you see? What's the trade action right here? Right? Like Bernard, like tell me what you think about Rubrik. What should I do? Should I buy or sell? All right. Sometimes I got the instructor has to flip the question on the students and be like, hey, what do you guys think of the stock? Uh, definitely. Okay. So I see some comments here. V says definitely buy some for long term. Sure, I agree with that if you're thinking very long term. But Evan also says pretty choppy. And then Bernard says this is not my type of stock. Okay. So different variations of comments there, right? So let's say V's comment definitely buy for the long term. Well, I agree because it is the best in data security in enterprise software. So yes, I agree with buying the leaders. And then Evan says pretty choppy. I also agree because the current price action is choppy. It's in a currently choppy price trading range, price action trading range, which is basically this trading range right here. That's all you're going to get. All you're going to get is just like this until it gets out of that, right? So I agree, it's choppy. And then Bernard says this is not my type of stock. I would also agree with that, right? It's not my type of stock right now because it ain't moving. It's not behaving like a leader. But the moment it behaves like a leader, it's going to be my type of stock. Evan says I'd wait till it stops chopping a bit. Yeah, I agree as well because it's in a different mode, right? Investors are in a different mode right now people are trying to buy, but then insiders are trying to sell, and I could see that in the reflection of the choppiness. So we need to understand these different modes of a stock, what a stock goes through. Uh, until Evan says finds a nice support. Yeah, I mean you could also find some nice support, but ideally we got to get out of this box right here, right? If we're going to do box trading. How deep is that range? That range is between $37 and $29, right? I'm surprised no one has says I love it, right? Because one, if you said I love it, I'd probably say you are crazy, but good job, right? Because why? Why would someone say they love this? Why would someone say they love what they see right here? It comes down to like what type of beer you like to drink. So why does someone like this? Because they obviously they see a trading range and they say, well, okay, I could trade long to 33, short until 30, right? And I could just play this range all day, and I know it's going to always be in that range. Correct. That's also correct. So if it's in a trading range, we have to we have to recognize that and we have to respect that, right? And that is also correct because you can make money in anything, right? People could be like writing, neutral options or whatever, right? Like low collecting pennies off the in front of the steamroller, they say, right? Low volatility. Um, that's definitely possible. Like, yeah, like you could be selling calls like way up here and or selling puts way down here, right? TOL is my type of stock. So Bernard now, he recommends like another stock, TOL, Toll Brothers, right? I agree. If we do XLRE real quick, and see the real estate sector. With lower rates, you anticipate higher real estate prices. So real estate owners are feeling pretty bullish, right? And what we see right here in XLE, we see a very strong trend. And again, what are trends? Trends are created by a larger player, right? A larger player is systematically coming back and for making a trend occur, right? That's orderly accumulation that I see right there. So okay, real estate sector looks pretty good. Let's look at Toll Brothers, one of the leaders. Now I love it. We're playing leaders, right? Leaders in a residential construction space. So I also see this one going up. Yeah, Bernard knows what's up. Bernard's buying the powerful ones, right? Now we could go in here and oh wow, yeah. There's massive reasons for this to go up, but you know what's funny? Is what we said, for several weeks now. The vast majority of like newbies or amateurs, they would never buy this because it's too high, and that is a problem, my friend. If you say this is too high, you're not looking underneath the hood of what's happening. The shares outstanding are seriously going down. So there are corporate mechanics behind the scenes here that are making the stock price go up, right? But the problem is like you're like, oh, it's too high. Then that's again that goes back to like you're get out of your brain. It's what I've learned. I mean, is that the phrase? Like, if you say this is too high, well, it's a corporate maneuver to dry up the shares here. There's less shares, and sales are performing, and earnings are increasing, and valuation. I mean, multipliers are different here because it's residential. It doesn't have that much debt, 4,800 employees, and it's a market leader, right? We go to consumer cyclical. Sorry, residential construction, not consumer cyclical. And we can look underneath the hood and see who owns it as well. But Toll Brothers is a leader, as you can see right here, one of the leaders, number 5, right? But you can also look at DHI, DR Horton, Lennar, and you see the rest are also going up. So now you also have a sector momentum or industry momentum, right? So it's not just this macro lowering of interest rates is impacting the other residential construction companies. So there's several layers of analysis here that we just did that has validated our ability to see that yes, it can go up. Um, so I moved out of Toll Brothers and went to Dollar Tree. As long as macro holds, yeah. So if you're scared to buy this high, right? Well, then you're going to miss out on something great. Because what you can do is identify risk points. So let's say there's some volume right here. Let's just say if you buy here, just say this is your risk right here, 150. All right. I like this stock. Everything looks good. Corporations are in favor of investors, right? When they're not favorable, it's the reverse. So in other words, when it's not favorable, we go over here. It's it's when it's like this, right? That's when you know the money printer, the equity printer goes burr, right? They're printing shares against us. That's when you'll see, let's actually look at real examples of that. Uh, did something happen? I heard a beep. Can you guys still hear me? You guys still hear me, right? Why did I hear a beep? Okay. Huh. Maybe I pressed something without knowing. Okay, I think we're good. Uh, but I'm curious. That was yeah, that was an interesting beep. What was I going to show just now? Sorry. Oh, I was going to show you a penny stock, right? So if we go in here and we look at a penny stock, and it's pretty easy, right? We just go in here, we filter out anything under 300 million, and we will see a lot of stocks that, let's go to one that is like bleeding out, right? And we ask why is it bleeding out, right? For like half the year it's been bleeding out, like it's like ML, like Mullen Automotive right here, right? Here's a penny stock. This one's bleeding out. Well, it went okay, so not enough data here. Okay, so I need a little bit more data. So let's do another one. Let's do any of these that are bleeding out. I mean, this is like totally like printing shares against the investor. It's so sad, but it is what it is. So, oh, okay, not showing me the changes in shares. I need something with a little bit longer operating history. So in that case, I will go to overview and I will go for something larger because it's too small, right? So we'll go for like a $300 million company that has not been doing well. Um, Maybe something like this right here, Golden Matrix Group. Uh, let's see. Let's see. Look at that. Look at that. Look at that. Look at that, my friends. Right there. Right there. Why? Why is it going up? Why are you printing shares against investors? What did investors do on the chart? Zooming out. This is a penny stock. It's never going to succeed with a history like this. At this point, just go bankrupt, what is it, chapter whatever, restructure, become something else, right? Like why strive to keep this alive? I guess because it's doing 44 million in sales. But this is you know, a, well, based off of this, it's a dirtbag company because it's not respecting investors, right? So that's a mechanic that we have to learn in here, guys. It's important. So going back to Toll Brothers, we have a beautiful scenario here, right? And prices are going even higher. But most folks, most amateurs are like, oh, I can't buy it. It's too high. uh, Bernard says you wouldn't seriously invest in any stock that is down 95%, right? Nope, nope, not at all. Because it's a consensus mechanism, right? Because if the stock is high, like it's almost like there's a reason why it's high. It's high because the other investors have done their homework and now they're showing execution and reflection of higher prices in the stock market, right? So that's the biggest lesson between amateurs and professionals. Professionals are playing the higher stock prices, as I've learned. But again, you can make money in all dimensions, really. Like in my honest opinion. Ivan says, except if it's coming from a DTL like PayPal or Baba. DTL? Oh, downtrend line. Oh, yeah, I was like, wait, hold on, DTL? From a downtrend line like PayPal or Baba. Or start, yeah, exactly, right? It's like PayPal is like the start of like stage two. Baba, yeah, exactly, stage two. So stage two, right? There's like stage one. Stage one is like the knife has fallen flat, right? Stage two is now someone's picking up the knife. So yes, like PayPal and stuff like that, it's starting to move. Um, you want to chase after those things, really. I mean, that's momentum trading 101. But again, not investment advice. Buying a stock that has been beat up. Yeah, and you pay for that, right? Again, we've been reviewing this one for like the last couple weeks here, like 2, 3 weeks, maybe even four. It's like Netflix. Like you could go ahead and buy beaten up stocks, right? But just know that beaten up stocks could take 2 years to recover. So that's why I think the beaten up ones, you got like even like Baba, right? I mean, it's moving quickly now, but I think it's gonna pull back at some point, but it's still gonna take a long time for it to really shine. So probably like leaps are probably the best because right now it's coming off of a long time low. Like this is not remember remember the concept of overhead supply, right? You have all these people right here are bag holding, right? Yes, even some guy up here who bought it at 300 is still bag holding, right? So until we clear that overhead supply, and that could take years, right? But this might be the start of like a pivot move, stage two move for China equities. Yeah, it could be a really good thing, but you have to match the time frame and put it to like years because a stock could decline like this, but it'll take years for it to recover. Versus like, the better horse is probably Penduoduo, right? Because that one's already at the highs and it's about to run up even higher. So this one might be the better horse because if you're betting on horses, you want to bet on the better horse, right? So we zoom out on this one, right? This one's at least closer to clearing these overhead supply right here, right? It's like this is like it's like this far away from overhead for clearing overhead supply because once you clear overhead supply, in theory there is no more bag holder unless you're short, right? If a stock is at an all-time high, what bag holder do you have? Everyone's happy. Even the at all time high, even the guy who bought it at $220.01, that guy or girl is happy because they're up 1 cent. There's no more bag holders, right? Now there's no more bag holders, but then there are solidified losers who sold at the low, bought at the high, sold at the low. Yeah, now you're a solidified loser. But yeah, that's something to think about. Um, Buying a stock that has been beat up, you wouldn't seriously. Okay, read that. So yeah, Bernard. Going back to Bernard's comment, yeah, you seriously do not want to invest in a stock that's down 95%. That's just wrong, right? Again, it makes me think of like Ring Central and stuff like that. Seeing, let me, I wanted to see the shares outstanding real quick. So sales have gone up, but no earnings. But stock price, oh well, stock price has actually been choppy. But I mean, it's choppy at, you know, again, this will take years for it to make a comeback, if it even makes a comeback, because at this point it's like on life support. This stock is on life support right here, from what I could see. Yeah, it's on life support because no investors are buying it. Until investors get excited, then yeah. Let's look at like Tesla and stuff like that, or Rivian. I mean, we should we look at more Chinese stocks? China related stocks. Here's Rivian right here. Remember, Amazon owns 20% of this. Again, still bleeding out here, so not too good, right? There are better ones out there. Let me actually look at gold real quick. Let me pull up GDX. I wanted to see if that was a topic today. Because really, like the focus right now, it seems like going into next week, definitely a lot of China stocks. But I want to do a thorough scan later tonight, and I'll update the weekly report and share what I think. Because that's how I kind of craft my ideas for each week. Okay. What other stocks? Let's start looking at other ones. So, I mean, really, we look across the board, China stocks left and right, right? Here's JD.com. JD's a pretty big company, but look, it's coming off of a low, right? You could say it's opportunity, but remember, there's a lot of overhead supply, so you have to give it time. But this is pretty drastic right here, right? So I do think it's going to correct. It's just the nature of like overhead supply. It's just a matter of when. If we look at other ones like Trip.com right here, another China stock. Let's zoom out right here, right? This one is actually hitting all-time highs. So this one is different because now there's no more bag holders, right? And this one, lots of volume, lots of price aggressiveness. Uh, it's extended, it's hard, but if you're aggressive, you could still dabble. I mean, if you're aggressive, but just know that it's going to pull back. Like it could pull back anywhere really, and it could keep going too. You just don't know because you just can't predict who's going to go in, next, right? Many things could happen right here. It could consolidate and bull flag it up, sure, or it could just keep going up too, because it's just like again, I don't know if I am properly measuring the caliber of this news here, right? So I can't quite tell because it's very macro-y and there's not that many macro professionals on the planet. Like I'd love to consult like a macro person and like who really knows macro and say and ask like how significant is this news? But until then, I'm in the dark, and so the only thing I really have is price action, and that will be continue to be my source of truth relative to like everything else, right? Uh, okay, let's see what else. So Trip.com, we can look at all the China related equities as I have it right here. So Alibaba, right, as we know, one of the top performers. Pinduoduo. I think I really like that one, but let's look at some other ones, right? Let's see which ones have cleared their overhead supply and that are attempting to go all-time highs, because that might be a faster horse in my opinion. So this one right here, right? I'm zooming out to the monthly right here. Lots of consolidation. It's still within this price area right here. Look at where it bounced right here. So awesome to see that it bounced right there where that supply or pool, liquidity pool, and now it's currently right there. So it's basically within that range right there. That's NetEase. Again, this is not a small entity. It's a $58 billion company. Let's continue to look at what other ones. NetEase. So I think this one, Trip.com does look pretty good. Baidu. Let's look at Baidu. Man, this one just brings back memories. Like this thing was just like not moving forever. uh, yeah, look at this. My gosh, man. I remember this back in like 2013, even this consolidation period. Look at it now; it's even cheaper now. That's wild. Again, it's macro related, but this one I wouldn't. I'm not too interested in this one because there's just so much that it needs to prove to me first. Um, is it possible I could do charts? And I just want to see the monthly, right? I want to see which ones are going to all-time highs. Monthly. I know I have a lot of like stuff in here. So it looks like all-time highs wise, it'd be this one.
Ship it and they bought it. Someone bought it, so I have to ship it. Why do I have to? Đây là hãng gì?
Oh, I'm gonna put it on mute. So Lily went. Wait, Lily, Lily, did you have a comment? Sorry, tongue twisters over here. TCOM. Okay, I'm scanning right here. Oh, do you have a comment, Lily? Oh, let me put you back on mute then. All right, I think yeah, you went off mute for a second. Let me see. I'm just scanning around, looking at other. Right. I mean, that's pretty well. This one's a little bit newer. A Toro lifestyle, but uh, not enough history right here, right? I'm just looking around, scanning. And this is like the analytical work that you got to do. How big is this one? Okay, so now it's too small. So really, I think the best one is probably Trip.com, since there's no more overhead supply, right? It's at all-time highs, essentially. Now, what do you do? Evan, what do you do? You say it's too high? Duolingo is another one. I think that's going to be a fast horse. Um, but this one I think is, I mean, it's US, yes, USA. So Duolingo is another one. This one's going to be fantastic. Very fantastic, I think. So yeah, I think the best China one might be, I mean, okay, I can't say best because it could be Alibaba still, but this certainly could be the best too. Let me see the sales performance-wise. So shares outstanding and sales have gone up in 2023, and they are profitable, it looks like. Low debt, multiplier-wise, 5, I mean, typical. 39 billion, 6 billion in sales every year. Margin-wise, very profitable. Man, 30% at 6 billion. Whew. Yeah, this one's gonna accumulate value for sure. I think we should do a little bit of deeper analysis on Trip.com right here. Wait, I don't recall. Trip.com is China? So I'm like shocking myself over here. I could have sworn I used Trip.com before. All right. Let's go to the tool and let's see who's in Trip.com because I actually like this one. I know it's like it's crazy, right? It's all-time highs, but it's up to you. It's up to you to decide, right? I mean, that's clearly all-time highs right there, right? All-time highs, and I want to see who it competes with. And going in here, let's see who else got Trip.com. It is TCOM. Oh, I put TR. TCOM. We go in here and we look at this and we click on this. And Ivan says, I missed the boat on Trip.com. $45 was the one to buy. There's better merchandise out there. Okay, so he said he missed the boat at $45, right? $45. 45, come on, man. $45 was the price to buy, sure. But it's still good right here, right? I mean, if you think you missed it, like, are you saying that it's not going to go to 100? Like, you don't want it at $100? It's going to go to $100. You don't want it at $100? Like, I mean, like, there's still meat on the bone here. If you think you missed it at 45, see, I would expect to pull back to the 10 EMA weekly. Sure, but this thing's on its way to $100. Uh, I got some confidence on that. Again, I could be wrong too, right? This is, open investment club over here. But we're going to analyze a little bit more, right? Because I think this is going to be even Morgan Stanley's in here. Morgan Stanley's got 3.65% of the company. Capital World Investors. It's kind of interesting, right, to see like some of these China-related companies, like the top holders are American companies. iShares. Let me see anyone's betting with conviction, like this person right here. CoreView Capital Management, 30%, and then this one is a Hong Kong entity, Kontiki Capital Management. Let's take a look. See what these guys know. See their betting styles, right? But I definitely like this one, and I think it could go to $100. Again, not investment advice. We're here to learn, and let's see. Let's loading up lots of data. So this guy's managing 634 million, right? Definitely a size that a little bit more digestible for us. Oh wow. Okay, so this guy or girl is managing 634 million, and their biggest position is this one, followed by this one, right? Very exposed to China related equities. Very concentrated position, I would say. Okay, that's interesting. Let's look at Kontiki. Yeah, Kontiki over here. And we go to Kontiki. This one is $1 billion, right? How are they managing $1 billion? Let's take a look in here, and we see the weight, and we see that, okay, C Limited, new holdings, and then Coupang, yeah, they're also in there as well. Oh, very, very, very interesting makeup of a portfolio, right? Very aggressive, I would say. Why is it aggressive? Because they bet big in terms of like the $1 billion portfolio for themselves, right? They bet concentrated positions, but they're not big enough to take a controlling amount of shares of the company. So yes, they bet big with conviction. So this is a hedge fund right here. Like this is more of a hedge fund because Well, it's not an activist hedge fund. Like it's not taking a board seat. It's like it's passive, but it's betting aggressively. So I would suspect they're extracting appreciation or directional trades, right? So it'd be interesting to see. Like I guess we should look at C Limited as well, see what that one is, see how they view it. Again, China, Singapore, ADR. So it could it could be also an Asian entity, but yeah, I see also they're betting on this. Okay, okay, I see. Directional value bets could be scenario. Again, I'm trying to decipher like what type of investor is this, right? Because there's different players out there. But anyways, that's so Trip.com. Right, I think we got a good feel. Let's look at some other fundamental things. Let's look at let's look at the fundamentals. So we know that shares outstanding, it did look like an increase, right? But 2020 to 2021. So let's zoom out. Let's see what happened in 2020 to 2021. 2020 to 2021, no performance, right? Because of all the increase in shares right here. But that's history now because very long operating track record, and now it's at all-time highs. All right. What else do we know? Let's actually this very long operating history. Let's actually go into here and let's pull this up and let's pull up a few things in here. Let's definitely do the net income. See how did net income perform. So the zero lines right here, right? So net income wise, oh, they're really taking home money right now. Okay, that's great. Let's look at the balance sheet. Let's put in total shareholders equity. Let's see if their balance sheet's growing. Yep, balance sheet has been growing since 2015. So let me see. That's the zero. This should be the yeah. So balance sheet has been growing since 2015, which is good. So there is value here, and you see prices have gone down, but the balance sheet has been consolidating a little bit higher. Income has gone up recently, and now with the China news. So what I'm thinking is, oh man, oh, darn, that's gonna skew my charts. So what I'm thinking now, again, I'm trying to come to conclusion about the picture of this company, right? So balance sheet is definitely there. There is value there on the balance sheet. We could go in there and look at cash. They've recently started in the last year to accumulate more net income, which is good, and prices have gone to all-time highs. So what factors do I think is influencing this stock higher? Well, because of its long operating history, as you see right here, it goes all the way back to 2004. It's telling me that there's 20 years of operating data. So this is a serious company. Trip.com is not going anywhere. And so it's a solid business, right? Decent valuation, strong, decent, really good balance, positive balance sheet, it looks like, and positive income. But prices are going to new highs. It's telling me that maybe it's the macro here with the change. Like, why is it going to all-time highs now versus like before? And really, it seems like it's just equity prices in China just being priced higher, really. So it might be more macro related, but I don't know. I like this one. I think this one looks good. Right? It's going to pull back. We just don't know how far it's going to pull back, but um, this is an active roller coaster if you want to ride an active roller coaster. Uh, I like NU and SC. I didn't look at NU yet. Let's look at NU real quick. So Ivan likes SE, right? Yeah, not bad. NU. Let's take a look at New Holdings. Oh, this one is well, Cayman Islands. Is New Hold I forget, is New Holdings in Brazil or am I thinking of a different bank company? Um, this one looks okay. I mean, recent selling concerns me right here. Um, Evan says, I might just put some in a Chinese index. That stimulus will take a couple years to filter into the hands of the people like you and me. Yeah. Okay. So if you want to play that one, Evan, then I would probably say this one's probably the best one right here. So if you want to go into an index, I'm thinking about like KWeb, right? Because it's like digital index. And if you look at the holdings right here, we go down. It has Alibaba, Tencent. It also has Tencent for you, which is nice. Uh, and then any other one, right? I'm guessing these. Yeah, it's not a bad pick right here. Actually, really really good. But if you want to play pure equities, you can as well. So I like this one personally. I actually track this one every week in my report, by the way. So this, but damn, did it rally more than like, I mean, long term, okay, long term. Like I think there might be a, I mean, again, you still have overhead supply. That's the hard part, but it is what it is. Maybe it might be a decent long-term view if you're bullish on what's happening right now, right? Again, I think it's very critical what we learn about what happened this week and how much money caused the markets to move, right? I think the most important lesson that we could learn this week in the world is how, it's basically in the last 30 days here, right? With the USA, like there was some macro news that led the way here that I think is very critical for analysis, which is like USA led the way with a 50 basis point cut. That's big. It's not 25 basis points, it's 50 basis points. Following that, we had a stock market that rallied to all-time highs. Following that, again, things like Meta all-time highs. Then following that this week, we had China announcement of very aggressive stimulus, right? Which again, these are macro chess pieces that are being played between like USA and China and Russia and all that. Then following, that announcement, we saw massive, fast capital flowing into China-related equities. So now the question is, what will happen next, right? Because some big pieces are moving here. But I think it's very wise to recognize this moment here, which is the USA made a decision because it's like just think of it as like the most gigantic chess game that you could see in the world. And the USA made a move, a couple 30 days within 30 days ago, and then now China made its move. So we, the people living in between here of these giant chess pieces that impact our lives, how does that change everything moving forward, right? So let's see. I guess food for thought. Let's see what happens next. I gotta say, very interesting. But yeah, I mean, I'd be surprised if we go even higher. I do think we're due for a pullback. I'm definitely very uncomfortable buying at these prices, but at the same time, I've learned that my comfort doesn't matter in the stock market. The stock market doesn't care about me, right? It is just a game that will infinitely be played until the end of humanity, essentially, which hopefully that never happens. Um, but the stock market will last longer than any of us, right? Because you have stocks back in like I don't know, like the 70s, the 60s, or whatever. Okay, so we got about 8 minutes left. Anything you guys want me to analyze? We analyze a lot here, and we dived into. We will see next week how the Chinese stocks perform. Yeah, it might be it might be a corrective week because like all the performance like got pushed in. Maybe it'll perform until like the half week mark, like Wednesday, and then it pulls back. Ivan says let's take a look at Kava. So let's look at Kava. Kava Group. Let's see what we got right here. Toast. Okay, we'll look at Toast as well. You're looking at restaurants. I see. Speaking of restaurants, I'm ready to eat some food. This one recently broke this quantitative line right here. So definitely concern, but it's kind of still in play, I would say. But it's let me see. Uh, you gotta have a stop, right? And one could use the 20 MA as a stop or the low of that bar. That's the stop right there, Ivan. So let me see. Wow. Okay. PE, PS, only 700 million, but 14 billion. Valuation wise, it's kind of extended for a restaurant, right? What restaurant does Kava Group own? I'm trying to recognize. Is there any place that I like to eat at? Oh, is it? Oh, is it really just Kava? Yeah, it hasn't crossed me. I guess they don't do enough revenue for it to hit my world just yet. Um, I mean, you could try here, but I'd probably have a stop loss, focus on risk management, stop loss at, those two levels right there. Those would be the two levels that you kind of have to get out if it doesn't work out. You just have to. Let's look at Kava is Mediterranean food. It is the Chipotle that people wants to buy. I see. Speaking of Chipotle, let's look at Chipotle. I'm getting a little hungry over here. Any other food recommendations? I'm thinking about food already. Chipotle right below the 100-day moving average. Let's look at Starbucks, right, where the Chipotle CEO moved to, because Starbucks has a catalyst, and so I'm expecting it to do well, and I want to check on its progress. It's making progress, by the way. Give it time, right? Starbucks looks good, but give it time. Max stop 95, right? SMCI and MU. So Micron had blowout earnings, or at least the markets reacted to positively to earnings, and then this one went up, right? So probably next support area for this one, the 200-day moving average, that should hold. ideally, for this to make, continue to make meaningful progress. But where did it hit resistance on, guys? Look at where it hit its head, like right on the dot, right there. Some 100 MA seller, right on the dot. Kind of cool, right? I mean, practice and you shall see. SMCI. Let's take a look at that. I mean, semiconductors might be a strong play next week. I think crypto might be a strong play next week. China stocks probably be a continued strong play next week. Fangs still pretty good, and we can still pull up the the $8,000 indicator as the continued value that I continue to provide for you guys in here. We could also see what the indicator is saying. So we do SPY plus QQ plus DIA plus IWM. Let's see what the $8,000 indicator is saying. Look at that. So last week, right, we had a long signal right here. It fired a long and it's still a long right here. We pull up the FANGs, which is Meta plus Microsoft plus Apple plus Amazon plus Nvidia plus Tesla plus Google. That's the FANGs right there. And we continue, fired long signal. We continue to be long as well. Right? Now a little bit slow down, which I agree. Like Amazon, was it Amazon? Yeah, some of the FANGs did slow down. I agree, but we'll see. It slowed down because I'm guessing the whole China news, right? Which kind of rotates the capital. I'm guessing it rotates the capital to, like, it incentivizes the large institutions that were already buying up the stock market to suddenly now decide like, oh, I should also consider China. So it's sort of like an interesting dynamic, right? Like you actually see the chess battles at large here, which is like the USA said, hey to all the funds out there, 50 basis point cuts, and stock market goes to all-time highs. And then on the flip side, China's like, wait, no, don't go to USA stocks, buy our stocks. We're gonna do aggressive printing. And so investors are like, wait, I was just about to buy, Nvidia and Meta to new highs, but now China looks pretty attractive too because they're gonna print money. I must chase both. So it's kind of like kind of like an interesting environment. But then, like, okay, what's the lines in between? Well, us individuals here, I think we could benefit from both sides printing money, huh? What do you think? It's just the ordinary person that doesn't know anything about investing um, is going to, not be fortunate in the near future, it seems, because inflation seems to be coming across the board in China and in the USA. And so the lesson that I close out with the 3 minutes that we have right here. Remember, there's three ways to make money, which is you work a job, of course, a 9 to 5, and then the other one is to start your own business, and then the third one is to invest. And my philosophy is that one day we all will retire from some 9 to 5 because structurally speaking, from a corporate mechanics perspective, corporations are treating you as an expense. And so, most corporations at most, they only want you to earn upwards of like 250,000. It's really hard to earn over 250,000, but that's just how it is. So the only way to clear 250,000 is, again, I'm talking about average, right? Don't get me wrong. There are the top upper echelon engineers or salespeople that are earning like 500K to a million, yes, but I'm talking about the average here, right? I think on average, most corporations want their cattle or employees to only earn upwards of like 250K. And then if you want over 250K, you have to distinguish yourself at that point. But when you distinguish yourself at that point, you're basically a small business owner inside a corporate entity that also knows how to price you well at all times. So, starting your own business, it's kind of like the same thing as becoming like a 500K corporate earner, in my opinion. And so that's ways to make money. And then the last way, or the other way, is to invest, right? And so the way to optimize on every single one is corporation is, climb the ladder, become a distinguished employee. Running your own business is building up a massive audience as fast as possible. That's really all that matters, I realize. Just build network, right? You can have big network, but you also want to build depth with your network, which is like, how deep do you go with your relationships? And that just takes time. So that's something that you could, in this day and age, you could build a broad network, but to build deepness of the network, it takes time. So that's business. That's how you really, outperform in business, in my opinion. And then last but not least, investing. The way you outperform in investing is actually putting in the hours of analytical work. So it's paying attention to news that happen like this every week with the USA, China, or stock market, and just routinely practicing the frameworks and the analytics. Because again, this stuff requires practice because we cannot see with our physical eyes 8.2 billion people that exist on the planet. But somewhere when we close our eyes or look at a chart, we see that there are 8.2 billion people in the world. And so for governments to manage the global population and all that, in the future of it, it seems like the deciding giants of the world, right? The China giants and the USA giants have decided to print money, and so us investors, retail investors, individuals, the stakeholders really at large, the population at large, I think it's going to impact us, and we have to anticipate higher prices all around, left and right. Which again, depending on what setting you're in, if you're in a job, expect not enough wage inflation, but higher cost of living, and you basically have to work double job, triple, quadruple jobs. If you're a business owner, expect higher revenue because your cup of coffee that you're selling for $5, you could sell it for $7, $8 now. And then if you're an investor invested in equities, anticipate your equities or your real estate prices to go higher. It's what I'm thinking, and we can see that across the board as we analyze like almost every asset class. So that's sort of the conclusion that I'm coming to, but we'll see. We'll see. It's wild, right? This next chapter right here. But there will always be solutions because I'm also a firm believer that you can't ditch the rest of the world. You can't simply rob, the youngest generation on the planet or even the future generations of like an equitable future. At some point, there will be room to disconnect, and people will allocate to other economic philosophies like Bitcoin or Ethereum or whatever, right? Again, a chair is only a chair as long as we all believe that it's a chair, but if K is the only one in the world that says that's a chair, but 8.2 billion other people say that's a table, then K is wrong, right? So yeah, that's something food for thought, something to think about. We always gotta be working because a way to put the backbones of the global population to work is essentially by decaying their purchasing power, and that is done via stimulus and easing and making cheap money, low interest rates, or whatever, and you see it across empires. So we got work, guys. We got work to do this year. It's about to be 2025. I'm already planning for next year. Jack says, "Long time no see. I'll catch you guys in a bit." Long time no see. Sure. I'm trying to put a face to the name here, but we'll for sure catch you around again soon. V says, "Thank you, Kay, for Hung's friend." Hung's friend. I'm trying to think of who's Hung. So many people. Apologies, Jack. I'm trying to remember. V says, "Thank you, Kay, for another great session. Like the customized approach based on what is happening in the markets. Appreciate it, guys." Tesla looks good too, Ivan. Yeah, I agree. Tesla looks fantastic. Um, I'm chasing after Tesla. I have Tesla. I actually sold some because the gains were really good. Thanks, Kay. Have a great day, week. I'll catch you offline since I need your help with funding some projects. Sure, sure. Uh, I hope that we have a pullback in October, Ivan says. Well, we'll see. Can't hope, just have to objectively watch what the markets give us. All right, guys. Any last questions? I think this is like, my time to log off soon and go get some lunch here. Wanted to see one in Korea. I I do have a text, but I'm trying to remember who Jack Chang is. Well, all right, we'll see. All right, guys. Uh, I will catch you guys later, and have a good night. And thank you for joining Investment Club meeting number 360 today. I know we keep going. It's a journey, and most I would say most would wish they started this journey sooner, because I'm really glad I put in all the analytical work over the years, because it's definitely structured, my processing or brain thinking and structures and frameworks and all that. Get it down sooner than later, and I think you'll better easily maneuver the stock market, and you become less fearful of it. Thank you for the education. Have a great week. Yeah, you too, Liz.